Hi everyone, welcome to today's video. I'm going to be sharing you how you should be doing your calculations when it comes to your property investments. Now, I want to emphasize that taking a data-driven approach, a numbers-based approach, is pretty much crucial to growing a profitable property portfolio. The reason is because if you take a data-driven approach, you're relying on numbers and rationale as opposed to emotions and guesswork when it comes to growing your portfolio. And we use the saying, if you're not using numbers, you're not investing in property, you're actually gambling. And so numbers enable us to protect the downside as well as maximize the upside with our property investment. And in this video, I'm going to show you exactly the types of calculations that you need to do for your property investments. Starting from the top, you need to calculate your net return on investment. What is your net return on investment? Well, it's a calculation that enables you to see how much profit your capital can make, because it's all about net return on investment. Because the cash flow and the profits you make needs to be calculated in relation to the amount of capital that you have. Because if you have £1 billion and you make £1, that's not very impressive. But if you have £5 and you make £1 from it, that's decent, that's pretty good. And so it's all about net return on investment. How well and how effective is your capital in generating cash flow? Now, in order to calculate this, you need to see how much capital is required for this investment property. So this means calculating all the costs and all the expenses. So mortgage broker fees, solicitor fees, your deposit, stamp duty, refurbishment, every single cost, everything that comes out of your pocket needs to be factored into this decision. And then once you have your costs and your expenses, then you need to calculate your profits, so your cash flow. So what is your monthly or annual cash flow? After you deduct, the mortgage repayment, maintenance, works, agent fees, what is your profit after all of that? And then you take that profit and then you divide that by the capital that you deployed into this property investment. And that gives you your net return on investment. That enables you to see how well and how effective your capital is working for you. And in terms of benchmarks or KPIs, key performance indicators, buy-to-lets should make 10 to 15% return on investment, ROI, and HMO should make anywhere between 20 to 30% ROI. So whenever you purchase a property, you need to run the calculations and see, do your buy-to-lets or do your HMOs fit this benchmark or framework? And if so, you should proceed and go ahead with it and make the purchase. And if not, you should find something else. And lastly, at the bottom, you can see stress test. This is actually something a lot of property investors forget to do, or they do it really, really poorly. So I'm going to show you how you can properly stress test your properties. What does stress test mean? This means testing and assessing the performance of your property in alternative scenarios and ideally worst case scenarios. So when you do this, you can see how profitable your property is at, for example, higher interest rates, if you have a couple of void periods, and if the refurbishment takes longer than expected. You can see that you can really see if your property is going to be profitable in the worst case scenario. A lot of people don't do this, and so when interest rates rise, their properties suddenly become unprofitable. Or if they have a void period, suddenly the annual income is less than the mortgage. Or if the refurbishment takes a little bit longer than expected, which can always happen, then suddenly that offsets the entire property investment. So before you purchase your property, you need to do the right due diligence and you need to be prepared for the worst case scenario. And that's why you need to stress test your properties for your purchase. And that's it. This is the entire process and all the things you need to think about when it comes to investing in properties and more specifically doing the calculations for your property investments. This is really short and simple, but I want to keep it to the point, but this is really all you need to do.